Are you a chart analyst or a trader? A lot of people are good in analyzing but super bad when it comes to execution. Therefore, today I'm here to solve that problem. First things first, I'll start with covering market structure. I'll draw these horizontal lines in order for my trend to be accurate. We have three types of trends. We have an uptrend and a downtrend. Then lastly, have a sideways trend. These are the three types of trends we have. An uptrend is made up of a series of higher highs and higher lows. Higher high, higher low. A high that is higher than the previous one and a higher low. A high that is higher than the previous one and a higher low. Whilst in a downtrend is made up of a series of lower lows and lower highs. A lower low, a lower high. A lower low that is lower than the previous low and a lower high. A lower low that is lower than the previous low and a lower high, and so on. And lastly, we have a sideways trend, whereby it's not going up or down, but it's having equal highs and equal lows. So, first things first, let us focus in an uptrend. Focusing in an uptrend, we have our impulse move and our corrective move. An impulse move is the movement that goes along with the overall trend, meaning in simple terms you can say it's the longest movement. In an uptrend, our longest movement is our buys. Therefore, we can say in an uptrend our impulse move is our buys and our corrective move is the one opposing the impulse or is our sells. Our impulse move goes up, our corrective move goes down. And that being said, that's always what we want to see in an uptrend in order for us to confirm that we are still going to the upside. We want to always see price impulsing to the upside and correcting to the downside. So at all times, that's what we want to see. Therefore, once price starts disrespecting that, we definitely know that now that is a sign of a change of direction, meaning we will be moving from our uptrend to our downtrend. What do I mean by that? For example, this structure is what we usually want to see, but when it comes to reality, this is how price is. Let me just draw the structure in order to explain what do I mean when I say once price starts disrespecting that, then we are having a sign of change of direction. In reality, this is how price moves. It will impulse to the upside and starts correcting to the downside. Impulse to the upside starts correcting to the downside. Or if you are someone that loves cramming like I usually did in school, a correction is whereby you have a mixture of blue and red candlesticks more compared to the impulse. In an impulse, in an uptrend, we want to see blue candlesticks more compared to the red candlesticks. While in a correction, you want to see a mix changing. That's what a correction. That's how you can cram it if you usually crammed at school like me. So, as I'm still continuing, and then we have another impulse correction. And then how do we see that now we're about to change direction? We now see price no more impulsing to the upside, instead correcting to the upside. That is now disrespecting an uptrend rule, or I should say the properties of an uptrend. In an uptrend, we want to see impulses to the upside. So the minute price starts correcting to the upside, that is a sign of a loss of momentum, because a correction on its own simply means a loss of momentum in that direction where price is correcting towards. So in an uptrend, if price starts correcting to the upside, it's losing momentum on the buyer's side, meaning they don't have enough momentum to continue pushing price to the upside. Therefore, we will be changing direction soon. That's what a correction simply means. Therefore, in an uptrend, we always want to see impulses to the upside, corrective move opposing the impulse. A corrective move will not always go to the downside or opposes, or I should say, let me just put it this way. It will not always go to the downside. Sometimes your corrective move may be moving sideways. That's still a corrective move. But the minute price starts correcting to the upside, that's a loss of momentum, which gives us a sign that price is about to change direction, and then we will be looking forward to seeing sells. Let me make an example in a downtrend. So this is our downtrend. As I said, it's made up of a series of lower lows and lower highs. So in this case, which one is our impulse move? Our impulse moves is still the one that goes along with the overall trend. So which is the biggest movement? The biggest movement in a downtrend is our sales. Therefore, that will be our impulse move going to the downside, corrective move opposing the impulse. Impulse move going to the downside, corrective move going to the upside. Same thing. So this is what we are usually taught. This is how we are usually taught. But reality is that price will be moving in this way. Correcting. And so on. And so on. This is an overall downtrend. In that being said, how can we see that now price is about to change direction? It's whereby price is no more correcting to the upside or sideways. Instead, it's correcting to the downside, which is now disrespecting the properties of a downtrend. This is how we will see it. Now price is no more impulsing to the downside. Instead, it's correcting to the downside. This is showing a loss of momentum on the seller's side, meaning that we are about to change direction soon. That's another way of seeing market structure when it's about to change. One thing you should bear in mind is that price speaks. It's not that price is moving up, we are buying, price is moving down, we are selling. No, price speaks. Ask yourself this question every time you see price moving or retesting or changing direction at a certain point. Why is price turning here? Why is price turning here? Why is price turning here? Those are the questions you should be asking yourself rather than being happy that price is now turning without even knowing or understanding why is price turning right there. So that was the first sign of a change of direction. It's whereby price is now correcting towards the downside in a downtrend, or prices are now correcting towards the upside in an uptrend. It's now a sign that we are changing direction soon because we are losing momentum to wherever we are correcting towards. Let's move on to the 5 questions. What are the 5 questions? The 5 question is 1, what type of trend are we in? Are we in an uptrend or a downtrend? Secondly, which is our impulse move? Which is our corrective move? Thirdly, are we still respecting the second question? Are we still in an uptrend? Are we still impulsing to the upside and correcting to the downside? In a downtrend, are we still impulsing to the downside and correcting to the upside? Are we still respecting the second question? Fourthly, are we approaching any support or resistance? Or are we at any support or resistance? And then number 5, any candlestick confirmation am I seeing? Those are the 5 questions you should ask yourself before taking your entries. Right now, I have explained how price moves. So now you should consider these 5 questions after understanding how price is moving and all of that. Consider these 5 questions before even taking your entry. And that being said, let's make an example again with this uptrend. In our uptrend, let's ask ourselves the 5 questions. Which trend are we in? We are in an uptrend. Which is our impulse move? Which is our corrective move? Our impulse move is our buys, and our corrective move is the one opposing the impulse, or I should say it's our sells. Our impulse move is our buys, and our corrective move is our sells. Thirdly, are we still respecting that? Fine. We were respecting it from here, moving impulsively to the upside, correcting to the downside. Impulsively to the upside, correcting to the downside. Impulsing to the upside, correcting to the downside. But where price is currently at, it wasn't impulsing to the upside anymore. Instead, it started moving correctively to the upside, which is disrespecting the second question. All right. Fourthly, are we approaching any support or resistance, or are we at any support or resistance? Currently, we at our resistance. And as we at our resistance, that's another sign. Now we have 2 confirmation that we are about to change direction. 1, we consolidated towards the upside, which is disrespecting the second rule. 2, we at resistance. And then 5th, which candlestick confirmation are we seeing? That's where we start scaling down to our smaller time frame to see our candlestick rejections, our bearish engulfings, our doji candles showing an indecision between buyers and sellers. Those are the candlestick confirmations we're looking forward to be seeing. If you don't know them, kindly go and check the video I covered with candlestick confirmations. And then from there, what do we want to do? As we understand that we, in an uptrend, we have higher highs and higher lows, higher highs and higher lows. If you're scaling down to smaller time frame, you'll also see higher highs and higher lows, higher highs and higher lows, a high that is higher than the previous one and a higher low. In this case, what now are you going to wait for? You're going to wait for price to take out what? To take out the previous low, the low that gave rise to the recent high or to our last high. And that being said, in your smaller time frame, you'll wait for this higher low to be taken out, retest, and then we will be going down. From there. Remember, now you have more than enough confirmations. And if you were to construct your trend, you will see that now you have broken out of your trend. So the more the confirmations, the stronger your trend will be. One, we have a confirmation that price is no more respecting the second rule. It's consolidating to the upside. We are resistant. We broke our trend. We broke our uptrend. And that being said, if we're scaling down to a smaller time frame, we can see that we have taken out the higher low that led or gave rise to this last higher high. We have taken it out, now retesting, and we're going to the downside, not forgetting your candlestick confirmation, which will be now 5 confirmations. The more the confirmations, the stronger the trade will be. Make sure you are patient with this. You don't rush. You want to make sure that the trade is in your favor at its best. So now let us make an example with a downtrend. Our downtrend, we want to see an impulse move going to the downside, corrective move opposing the impulse, as it is doing right here. So we ask ourselves these 5 questions in order to get our entry. These are the 5 questions you ask yourself before taking a trade. 1, what type of trend are we in? We're in an overall downtrend. 2, which is our impulse move? Our impulse move is our sells, and our corrective move is the one opposing the impulse, which is our buys. Thirdly, are we still respecting that? We were impulsing to the downside, correcting to the upside, impulsing to the downside, correcting to the upside, impulsing to the downside, correcting to the upside, until price started correcting to the downside, which is disrespecting the second rule or disrespecting the properties of a downtrend, meaning we are now disrespecting the second question. Fourthly, are we at any support or resistance or approaching any support or resistance? We are currently at our support. So how many confirmation do you already have? 1, you are having a confirmation that price is no more impulsing to the downside but consolidating to the downside. 2, you are at your support. You are at your supporting zone. Let us look for more confirmations. Moving to smaller time frames, you will find a smaller version of a downtrend, which is a series of lower lows and lower highs, lower lows and lower highs, lower lows, lower high, a low that is lower than the previous one, and a lower high. So what will we wait for in a smaller time frame? We will wait for price to take out this previous lower high that gave rise to the last lower low, to take it out, come back and retest, and then we're continuing going to the downside. We've already changed direction. So it will be an addition to our confirmations that 1, we are no more impulsing to the downside but correcting to the downside. 2, we at support. 3, we took out the lower high that gave rise to the last lower low. 4, we have broken out our overall downtrend. Not forgetting our candlestick confirmation. Those are the 5 things you should consider. The more other confirmations, the stronger the trade will be. So, also adding Fibonacci and all of that. Fib is just an extra, or it's a spice, or it's a cherry on top of the cake. It's a cherry on top of the cake in order to add on your confirmations. But without a further waste of time, let us move on to the practical side of price. This is Euro USD. You're looking at Euro USD. I'll make example with previous price action. I usually start from daily only if I'm looking for my psychological levels. In this case, this is my uptrend, overall uptrend. This is my overall uptrend. After this, do I want to mark any levels? I can mark this level since price is almost approaching it. I won't mark this one as price is still far from it. Try and keep your chart as clean as possible. After that, go on your 4 hourly time frame. Looking at our 4-hourly time frame, let me make an example with previous price action on how would you have got your entries. First things first, you will have saw that we are impulsing to the upside, correcting to the downside, impulsing to the upside, correcting to the downside, until we started also correcting to the upside, which was now disrespecting the second rule. Let us focus here for now and check into a smaller time frame such as 1 hour, 30 minutes or 15 minutes to see if we can get other confirmations. Already we have almost like 3 if not 2 confirmations. Prices consolidating towards the upside, disrespecting our second rule, and we at resistance. Now let us go to our 30-minute time frame, looking at this portion right here. So here we are. We can see that we are in a small uptrend inside a bigger uptrend, which is made up of a series of higher highs and higher lows, until we started doing what? We started correcting towards the upside, as we can see how price was moving. This is the last higher high. What gave rise to this higher high? It's this higher low right here. Let us now confirm or add all our confirmations. First things first, what is the first confirmation? Price is now consolidating towards the upside, which is just respecting the second question. 2, what is another confirmation? We're at resistance. 3, we saw this low being taken out, the last higher low that led or gave rise to this higher high. It has been taken out. After that, we saw a retest and we broke out of our overall uptrend, our small uptrend in our smaller time frame. And that being said, you have saw this rejection right here and a bearish engulfing. Already you are what? You are expecting to take your entry right there, and then you pushed to the downside. Or also you would have taken your fib from where the impulse started to where it ended in order to get this entry right here. That's how you get your sniper entries, whereby you enter through a week or this shadow, I can say this shadow, and then you are going down with price. That's how you should have got this entry right here. When you're targeting, it's either you target your previous low or you take your price range on how the impulse went, this impulse, this new impulse, calculating it from here, then dragging it from your entry. Your entry would have been at level 50, for example, from your entry to here, and then price smashes your TP. Simple and straightforward. If not, you use previous price data where price had failure in either breaking above or below. In this case, it had failure in breaking below. Therefore, you would have used this as your first take profit. Stop loss is very tight. The more other confirmations, the stronger the trade will be. So now let us go and check for other examples. Looking at another example, when price started reversing from here, you would have got it the same way as I told you. You would have got the sell trade. It's the same way you would have got this buy trade. First question answers, we are in an overall uptrend. Secondly, are we still respecting the second questions, or I should say the properties of an uptrend? No, we're no more respecting that. And that being said, we now have 2 confirmations. We are consolidating towards the upside, which is disrespecting the uptrend properties. We are at resistance. In that being said, you now scale down to your smaller time frame, such as 15 minutes or 30 minutes. You're looking for the higher low that gave rise to the last higher high to be taken out. After that, you wait for a retest and a continuation to the downside, not forgetting what your candlestick confirmations. So in this case, as we saw that price is now consolidating towards the upside, you will have taken your entry from here and you know that you are exiting maybe around here. Simple as that. Simple as that. Whatever you look for on your bigger time frame, or whatever I explained on the bigger time frame, is exactly what you look for on your smaller time frame. It's exactly the same thing you look for on your smaller time frame. So what are we expecting right now on Euro USD? This is the last higher high we have. If this is the last higher high we have on Euro USD, what gave rise to this last higher high? It's this higher low right here. It's this higher low right here. So what were we expecting? We're expecting price to take out this higher low. It has already taken out this higher low right here. Therefore, we're expecting price to sell anytime from now. We're expecting price to sell anytime from now. And also, if you're using your fib confirmation, you can take it from where the impulse started. Okay, this was the last high to where it ended, which is right here. you see where price exactly turned. It turned at level 618. As I said, you don't only look at the levels, but you look at the relationship price has to those levels. So on Euro USD, I'm still expecting a continuation of sells. The more you practice this, the easier it becomes. On my side, I can even tell you what's happening looking at the chart on a 4-hourly time frame without even having to scale down to my 15-minute time frame. At the same time, if you want to get sniper entries, that's how you get it on your smaller time frames. So moving on to the mistakes that are done by most traders. If you are a trader that executes more than waiting, then you are a Mumbai trader, which simply means a fake trader. Trading every day doesn't make you a successful trader, but waiting for trades to come to you and those trades aligning with all your entry confirmations is what makes you a successful trader. It happens that a week ends with no trades taken just because I haven't got all my entry confirmations I want to see. That's the first step of increasing your winning rate. It is to be patient and wait for trades to come to you. Nonetheless, this is Tiran The Goat. Make sure you let me know what you think of what I just shared under the comment section and give me your opinions. And that being said, don't forget to hit that like and subscribe button and share the video as much as possible, as it is just free information. I also have a Discord mentorship special that is running. You can join whenever you like to join. It's just only $29 and it's a once off payment, and the mentorship is lifetime. If you want to join, you know where to get me. I'll leave my number on the description below, and peace out.